Hey everyone, welcome back to Smart Realty Secrets, where we break down finance, real estate, and wealth building strategies in the simplest and smartest way possible. Today, we're talking about one of the most powerful tools hidden in the IRS tax code, yet most investors never use it. It's called the 1031 exchange, and it allows you to grow your real estate wealth completely tax-free. Yes, tax-free. So let's jump right into it. A 1031 exchange, also known as a like-kind exchange, lets you sell an investment property and pay zero taxes right now as long as you reinvest that money into another investment property. You're basically swapping one property for another and letting your money keep working for you without the IRS taking a bite out of your profits. Imagine this. You bought a rental property for $200,000. A few years later, you sell it for $300,000. Normally, you'd owe taxes on that $100,000 gain. But with a 1031 exchange, you keep all $100,000, every single dollar, working and compounding for you. That's exactly how wealthy investors accelerate their portfolio growth. Now, how does the process actually work? First, you sell your property, and here's the key. You cannot touch the money. It must go to a qualified intermediary, also called a QI. Next, you have 45 days, just 45 days to identify the property or properties you want to buy. No extensions, no excuses. Then you must close on the replacement property within 180 days. If you follow these rules correctly, you pay zero capital gains tax today, and your new property simply takes on the tax basis of your old one. It's like upgrading your wealth without paying a penalty. Let's look at a real example. Sarah bought a small duplex for $150,000 about 10 years ago. Today, it's worth $300,000. If she sells it the normal way, she's probably paying between $25,000 and $40,000 in taxes. That's a ton of money disappearing. But instead, she uses a 1031 exchange. She reinvests the full $300,000 into a bigger fourplex worth $600,000 by combining her money with a loan. Suddenly, her rental income increases, her equity grows faster, and she owns a much larger asset that appreciates more quickly, all without paying a single dollar in taxes on the sale. This is how everyday investors turn into million-dollar investors. So what qualifies for a 1031 exchange? The property must be investment or business real estate. You must reinvest into another like-kind investment property. Primary residences don't qualify. Vacation homes generally don't qualify unless treated as rentals, and you must use a qualified intermediary. But here's the good news. Rental homes, duplexes, apartment buildings, land, storage units, commercial buildings, and even triple net lease properties, they all qualify. If it's investment real estate, it probably qualifies. Here's the real wealth secret behind the 1031 exchange. Most millionaires don't just buy real estate, they upgrade real estate. They move from smaller assets to bigger ones every few years using 1031 exchanges. Many investors continue exchanging properties again and again for decades. And here's the wild part. When they pass away, their heirs get a step up in basis, meaning the tax that was deferred for years can disappear completely. It's one of the biggest tax advantages available in the U.S. So if you're serious about building long-term wealth, the 1031 exchange is a strategy you absolutely can't afford to ignore. It lets your money stay in motion, grow faster, and compound without interruption. If today's video helped you understand this powerful wealth-building tool, make sure to hit the like button, drop a comment below, and subscribe to Smart Realty Secrets for weekly insights on finance, real estate, and passive income growth. Let's keep building your wealth, one smart move at a time.